Hi there, thank you for viewing this week's video. Let's look at the indices and check out how they have performed and also the outlook for the upcoming week. First, let's do a quick discussion on the market performance last week. The US market started the week positively until late sell-off ensured they closed the first day of trading in the red due to the Apple report. However, they managed to recover on the next day strongly to test and break out from their respective resistance levels, which I have anticipated last week on the rally. Netflix and Tesla results have certainly boosted the market, and like the previous quarter, the Snapchat result caused the market to close the Friday in the red. But overall, the US market still ends the week at the positive region and most importantly, above their previous resistance level. In the Asian market, the STI has rallied as anticipated, breaking above its resistance. This is beyond expectation to potentially start a new uptrend, while Hang Seng, as anticipated of sort, did not make it past 20699 at the end of the week. Now, let's take a look at the performance chart. Over here on the screen, you'll be able to look at all the indices line chart over here. And we are looking at the Dow up the week about 1.9%, S&P 500 over here, up about 2.6%, Nasdaq kept the week at higher 3.3%, the STI up about 2.7%, while Hang Seng is up about 1.57%. Now, looking at the technical chart, we are looking at the Dow first. So let's go to the US market. So FOMC will be in focus next week, and a slew of economic data like the PCE data will affect the market. Technically, we are looking at a breakout, which is breaking out from the bottoming sign, and usually these signs do suggest a potential change in trend. But however, we must see more action. Like the previous time, over here, there was a breakout, but the Dow did not continue higher. So therefore, the change of trend did not succeed. If you notice here on this candle, we have seen a breakdown. So similarly, next week, we are going to look out for this kind of sign as well. So what we are looking at is that, is there any possible consolidation going forward? Let's do some drawing. Is there going to be something like that next week because of the FOMC and then a breakdown? If history repeats itself, of course, we may see more downward action towards this support level, or even to this support level over here. Now, if the Dow can continue higher, needless to say, we are looking at a potential upward movement towards 33,277. So in short, what are the key levels to look out for is 31519 and 32219. Right, these are not 4D numbers, but just for you to look up. Closing below or above either of this level may suggest bearish or bullish movement ahead. Now, S&P 500, we are looking at the similar action to the Dow. So it closes the week above its previous resistance level over here. And if we look at the previous action like this, if there's any consolidation for the S&P next week, do watch out for a break up or breakdown. Okay, so if any break up or breakdown would suggest the market will be either going higher or going lower. So the level to watch is 3920 and 4012. Closing below either level may suggest downward or upward movement ahead. Now, Nasdaq very nicely follow the technical observation beautifully. Okay, so this is where we must really applaud and praise Nasdaq for it continuing its upward trend with the ascending triangle breakout. And then, of course, if we follow the technical, the candle pattern on Friday suggests it formed a one black crow pattern. and this may suggest some downward action going for Nasdaq next week. And if it really goes down, the 11,434 level must hold, and then a rebound to test the 12,093 level and break up from there would continue the uptrend. So it looks like this. So if it really pull back, test this uptrend line as support, rebound to this high, and then continue higher or even to this level, would ensure the uptrend will continue. Needless to say, of course, if it doesn't pull back and then straight away go to this resistance and beyond, of course, we are looking at the more upward movement right away. All right. Now going to the STI, we have seen the STI broken out strongly over here. And this is a good sign to tell us that the previous consolidation is over and a potential uptrend is in the making. Now, the Friday's closing is telling us that the previous Thursday sell-off is just a test of the market to see whether is there any underlying seller waiting to sell off the market, or is just pure profit taking. So end up Friday tells us it's a pure profit taking on Thursday. And of course, there is no bearish sign for now, and the next resistance is 3213. So going forward, I still think that the US market and the key data from the US economy is going to affect the STI. So thus, any pullback is still possible. So in any case, 3151 must hold as a support, and then breaking above 3186 to test this 3213 will show bullishness. Okay, so these are the levels for you to look out for. Next, Hang Seng, we are looking at Hang Seng's, which started the week strongly, but floated at the end of the week as it floated at the psychological 21,000 level, as it was dumped lower to close below 20699, a level which I believe last week would resist the index. True enough, the index closed below the mentioned level, and we are looking at the technical aspect that the candle patterns are not exactly bullish. There is a risk for the index to trade even lower if there is no significant action to help the index to close at the high next week. The key levels to watch are 21,111 and 20,661. Closing above or below this level may suggest more bullish or more bearish action going forward. Some say that the fine dished out on TT marks the end of the crackdown, while some worry that there is still ongoing crackdown. So I think there is no fundamental issue with the corporates in China, but the direction of the market is at the hand of the China government. Now, wrapping up, we are looking at a challenging week next week, and we are expecting some less hawkish tone from the Fed. So if so, the US and Singapore market can move into an uptrend. And of course, the lower inflation numbers from PCE data would help the uptrend to continue. Hang Seng, on the other hand, faces a lot of uncertainty. A bearish chart coupled with uncertainty from the government. So we really need to watch for the next few action to see how Hang Seng would pan out to be. From the weekly chart, I must add, for Hang Seng, it doesn't look that bad. It is an inverted hammer pattern, but of course, we really need more action from the daily per se to tell us that the index can recover from its recent sell-off. All right, I'll see you again next week. Have a good day ahead.